Welcome back to Global TA. Today we'll be actually in the Turkish lira charts to show you how you can use patterns, both continuation and reversal patterns. We'll talk about all different patterns within those kind of two sections that you can use. It doesn't matter in any market. That's the whole point of this course, is not to just be able to trade crypto, not just be able to trade forex, but commodities, stocks, bonds, really anything in the capital markets. It's very, very vital that you understand technical analysis, and that's all of this course. That's what it's about. Most people charge ridiculous amounts of money for this, but I want to make sure this information is out there for free. I'm trying to build this course, someone can watch it today in 2021 or in 2031. So these principles remain the same. Technical analysis is not just something that comes and goes. It's not a fly-by-night thing. Rather, it's fundamental skill you can apply in any capital markets as long as you understand how to apply these things. But first, you have to go watch the first two previous videos. You can watch them on 2x speed like I talked about. That's typically how I consume information. If that's too fast for you, watch them on 1.5x speed if you don't have enough time to consume like 30 minutes. But this is the first one talking about frameworks and paradigms. You have to go check this out. So this is Global TA1. I will have this link down below along with Global TA2, which was talking more about fundamentals in the charts, how to set up a trading strategy with entry, exit, profit, stop loss, risk management, all these different things, along with the basics of just support and resistance, which is, honestly, you can literally trade just if you understand support and resistance. But I hope you guys go watch that. Essentially, the reason I want to be in the Turkish lira chart is really to show you that it's not just about crypto. It's just not about USDT, BTC. Rather, you can apply this to any chart, like I'm saying. So let's start off with one of my favorite patterns, just a basic symmetrical triangle pattern. So really what we're looking for is key touch points here, okay? So think about it just like these support and resistance lines, is you want to look for these key touch points, these areas of kind of confluence, you can say. So right here, okay, why am I choosing this area? And again, the beautiful thing about charting is you can literally go on any chart in any market and practice this. You don't have to spend your money and time doing this. It's really not like any other thing, honestly, in business or most things. You have to put your money in to test these things out. But with technical analysis, you can literally just practice in the charts. Grab TradingView. It's free. I have it linked down below in the description. And just play around with the charts. It's great to do. This is a skill that you can literally use for the rest of your life. If you understand this, whether you're doing it full-time or not full-time, that doesn't really matter as long as you really understand this. Also, I apologize for the shiny forehead. I just got done with Turkish hammam, and I'm feeling like a newborn baby. They yeah. Let me know in the comments if you've ever done a Turkish hammam. It makes you truly feel like a newborn baby. So I'm feeling great. But anyways, you can see essentially what you want to understand here is these lines are never exact. Remember that. With technical analysis, never think in certainties, but rather in probabilities. So the idea here with any triangle pattern is it's a continuation pattern. Now, what does that mean? Well, the trend. So look at what is the trend leading up to this point. So pretend that this hasn't already happened. So this was in what? December of 2019. This trend started in August of 18. So if you're a macro trader and you're trading this and you only saw this, okay, what is the trend leading up to this, right? Well, it's a bullish trend. It's going upwards. That's a bullish trend. It's going downwards. It's a bearish trend, right? So a green candle is a bullish candle. A red candle is a bearish candle. We talked about this in the fundamental video, as well as the anatomy of a candle. So you can see here the trend leading up to this pattern. First of all, it's the overall trend leading up to it is technically, you could say it is a rising wedge. So we can draw that out. A rising wedge essentially is like this. It looks kind of, you can also call it a rising channel. The main thing here is to not get caught up in the like naming and all these things, because it just humans came up with these names, so the names don't really matter. Don't lose the forest through the trees, if you will. But the main thing to understand is these patterns. For example, this is technically a bearish pattern, but leading up to this, it didn't turn out bearish. It reversed on us. So this is the thing with any of these patterns, is you want to identify what is the overall trend, and then you can move into smaller time frames. So for example, we're in the daily time frame. So remember, if you watch that fundamental video, each of these individual candles, if we zoom in real close here, each of these candles here represents the price action in one day. And when I talked about the anatomy of a candle, just to reiterate, essentially the open and the close are the body of the candle. So if we're just zooming in here a little bit, remember the body of the candle is right here. So here, let's find one. So let's just point out this red guy right here. This is a great example. This right here, okay? So this, see how the body was really small? That means that the opening and close price was very close together. But the overall price action for that day is the wick. Okay, so this is the wick going both upwards and downwards. So that's essentially where price has moved within that day. It's like the history of the price action. Okay, that's how you can kind of think about it. But then the actual open and the close is the body. And for a green candle, bullish. A red candle, bearish. The open and the close are inversed, right? Okay, so for example, for this green candle, it opened right here around what the $4.70, and for the close, it closed right here at let's see, $4.86. But for the red candle, it doesn't open here, right? Because this is the inverse. Rather, it opens here and closes here. Opens here, closes here, opens here, closes here, opens here, closes here. But once we get to this green candle, opens at the bottom, closes at the top. Red candle opens at the top, closes at the bottom. Opens at the top, closes at the bottom. Green candle opens at the bottom, closes at the top. Hope you understand that. It's very, very important to get the anatomy of a candle. Just wanted to really pound that in so you guys understand that, because it is actually vital. You know, so many people, again, they skip the bounce passes, if you will, of technical analysis and just go straight into like Fibonacci extensions, which we will be talking about more advanced strategies later on in this course. It is an 8-part course, but the key thing to understand here is making sure you have the fundamentals down, because you don't want to get into a very, very high risk, high reward trade and go, oh, wait a second, I forgot the anatomy of the candle. I forgot about the body. I forgot about the wicks. I forgot about what that means. And these things all kind of go into understanding how these things are going to factor into understanding probabilities moving forward in the charts, so you can make a proper trade. Again, making sure you have the proper stop loss set, making sure you have your risk management, your entry and your exit, all those things set up, your plan in place. You have your journal. We talked about having a trading journal and paper trading in the beginning. So returning back here, as I was saying, the trend leading up to this is the macro trend, really, is kind of this rising wedge, okay? And technically that is a bearish pattern, okay? So now we're in a symmetrical triangle here. Why are we in a symmetrical triangle? Well, price is consolidating. You see, this is a triangle here. And how do you trade a triangle? Well, what you do out of a triangle is you actually measure the base right here. So you could draw this triangle multiple ways. That's why, remember, I said this is never an exact science. This is always how you want to draw it. So let's say you see it like this. You want to draw your triangle like this, and you don't want to take this top part. Rather, you want to go like this. Okay, well then that's fine. That's completely fine. So how would you trade this? How would you set up your stop loss? How would you do this? Well, since it's a continuation pattern, remember, as I was talking about in the beginning, triangles are always continuation patterns. And a descending triangle, which we'll cover here in a second, is a bullish pattern, while an ascending triangle is a bearish pattern, okay? So this is something you have to keep in mind. Typically with patterns, anything that's going, if the trend in the pattern is consolidating towards the upside, or rather just kind of continually basically bouncing in between this like key levels here, typically that's a bearish pattern. So it's the same with triangles. If it's going like this towards the upside consolidating, that's a bearish pattern. If it's consolidating to the downside, it's a bullish pattern, because you see it's a pent up kind of consolidation demand as it's kind of slowly decreasing, and then once you kind of get to this impetus point, then you see that explosion towards the upside. And again, how you measure this, how you would set your trade up here, is you would measure the base of this triangle here. So it's always good to be a bit conservative with this there. So you would just draw it like that. And by conservative, I mean you don't have to max out the full triangle. Just make it. It's better to err on the side of caution, so make it shorter rather than longer, basically, is what I'm saying. And then you would measure this measurement price target right here. So you can set that up different ways. And I mean, that works out about perfect. So you could take profits right in this area, and maybe you could pull like half your profits out, and then you could set your stop loss up here so you don't have any risk, essentially. So what I mean by that is, again, we'll talk about how you can actually do this trading more in the later courses, but just if you're watching this back, this will kind of help you understand how you trade a pattern like this. And throughout the course, by the way, obviously I'm going to keep reiterating all these different things, but you see how we set this line up, right? So you see this line right here that we just did from this measure move price target. Well, you set your take profit right here, and this can be automatic in trading. That's a beautiful thing. You don't have to be staring at the charts. You can set up the trade. Once you're in it, you can set your stop loss. Boom. And then go work out. Go do whatever you want. Go enjoy life. That's the beautiful thing about trading, is you don't have to constantly be worrying and stressing about these things. You can let these things do it for you. That's the beauty of this. You can set proper stop losses and basically have it be automatic for you. Now, I always recommend limit orders instead of market orders. Again, we'll cover that later. But my limit order here would be somewhere in this range. That's kind of trading the breakout there. So you'd set your stop loss somewhat short. So in this case, it's a 4.7% stop loss, a 22% gain. So a pretty nice risk to reward there. And yeah, and then like I was saying, let's say you it pumps up here and you're a bit scared it's going to dump back down. Well, just move your stop loss up, right? So just move it up like this, and then maybe you pulled about 50% profit there. You saw this happening, you're like, oh no, I'm going to panic a little bit. Well, don't panic. Just set your stop loss. Maybe set another 50% pulling profit here, and then you'd move your stop loss up again, or set a trailing stop loss, and then move the target up. So you can see how you can kind of do this. I talk about this in the tiered investing approach, never being binary, never thinking buy, sell. Rather, it should be percentages of buying and selling. It should be averaging in, averaging out. If you know what you're doing, that's really what most people do. If they're professional traders, is they're not really just going binary with this. Rather, they have kind of a balanced approach. They have a multiple kind of a step approach, you could say. I just call it tiered investing. So you can see here what I'm saying. So now let's find ourselves a little descending or symmetrical triangle, or sorry, descending or ascending triangle. And again, we can zoom in here to see better patterns. You just have to zoom in a little bit. So here's a great example. Let's pop over to this one. This is back in back here in, when was this? April 14th. Well, do you remember what you were doing then? That's why it's fun to look back on the charts, because it's like probably weren't looking at the Turkish lira US dollar charts. Like that's what, you know, pretty good investors were probably doing. Not a lot of common people just look at you know, currency charts, but I find it so interesting. So or maybe common people do. I think the masses of people are probably watching like the Kardashians or something like that, but that's a conversation for another day. So you can see here this, you can draw this kind of as you can draw two different ways really. So you can look at it like this, where it's somewhat of a descending triangle. So you can draw it like this. Boom. And remember, these lines are never in exact lines. It's always a range. So if you get confused with this, just draw it out as a rectangle, like I talked about in the support and resistance video. Just draw it out like this instead of an exact line if you get confused. But once you get more advanced, you don't really need to do that. It's the same thing with these. It's never an exact line. Always think about it in your head like a range, so you don't get confused, and you can kind of draw these out quickly without really stressing. So by the way, when we're doing these historical, when we're just using these as an example, it's easy to do this, but when it's the actual price action of today, because you can't go back in the past and trade those markets, right? You have to trade the current markets. So you have to keep that in mind. We'll kind of show you some examples here in a second, but basically what you have to understand is you need to make sure that you understand that when you're just practicing on historical patterns, you don't know what's going to happen next, right? So it's a little bit more tricky when you're looking in the exact markets, but it really comes down to being pretty simple. Like I really got the hang of this very, very quickly with technical analysis, especially if you really, really focus on doing this, if you really, really put your energy into it. So why is this a descending triangle, right? Well, you see this top line is moving downwards while the bottom line is staying steady. And the reason why I said you can draw it two different ways is you could also technically, and this is a bullish pattern, by the way, which it broke out towards the upside. You could also kind of draw it like this if you wanted. Let's go here. You could draw it as kind of like a descending channel, I guess. But I personally like the descending triangle a little bit better. You see how there's kind of multiple ways to go about doing this. So, but let's do the exact same thing. Remember the measure move price target out of a triangle. So how you actually trade this as a breakout would be using the base of this triangle, right? So we're going to measure this, just be a bit conservative. Go from, let's say, like here to like, let's get this a little bit more straight. There we go. I'm not a perfectionist, by the way. That's I don't care if sometimes I draw those if I'm just doing it really quick, like if it's a current trade and I'm looking to trade like maybe like commodities. Like I'm always very interested in trading commodities to add to kind of my overall portfolio. Is like I'll draw a line towards the straight up and it'll look like this. And some people are like they always need it to be perfectly vertical, but I mean I don't really care. As long as you get the concept. Again, don't lose the forest through the trees. Let's see. So again, how you would trade this, we can get rid of this. Let's use the descending triangle. So remember, we just talked about a symmetrical triangle. Now we're on descending triangle. And by the way, I was going to say, by the way, a ascending triangle or ascending triangle is just the inverse of this. And I'll show you an example of that here in a second. But let's just set our stop loss to, let's say, like 3.4%, and then we would target this range, and that would be a nice little trade there. So you would have a nice little, 9.3% gain. Again, typically you'd be using leverage there. But then what I would do, since this is a W pattern right here, really what you could do here is, again, set a trailing stop loss so you can kind of take advantage of what's going on here. And you kind of get the point there. So that's how you're using those. And then here, let's just find a little ascending triangle real quick and show you what this looks like. Again, let me know in the comments if you have any questions so far in the video, but this one will be a little bit longer than some of the other ones, I think, just because of the topics here. And again, you can literally use any chart. Like, for example, let's just go to the 1 hour time frame. Let's just do this for fun, just to show you that it applies to all. The reason the technical analysis is so beautiful is you can literally be on the 5-minute time frame and use the same technical analysis charting as the macro time frame. Obviously, you should look at it in a different context. But here, let's just for example go here. Let's go USD Real. So this is the they don't have the Real. That's strange. Or let's just do USD JPY. So the Japanese yen. This is a perfect example. Okay, so let's see. So this would be the question: what is the pattern that we're currently in? Well, I hope you would be able to guess. But since I don't have your exact feedback, let me know in the comments if you know. But the pattern is this kind of a rising wedge, right? So you see this rising wedge right here. This is technically a bearish pattern. So this is boom, like that. Okay. So you kind of see how the rising wedges affect different things in different ways, right? So this is very, very important. And the way that you kind of want to see these is their actual neutral patterns, okay? So rising wedges are semi-neutral, and same with descending wedges, but inherently, based on the probabilities, it's more likely that they will dump down if it's a rising wedge, and it's more likely that they will pump up if it's a descending wedge, okay? So with some of these other patterns, they're inherently reversal patterns, they're inherently continuation patterns. For example, like I was saying with the triangles, it's a continuation pattern. But let's find ourselves in ascending triangle. Let's see. I'm missing some. Let me see. Okay. There we go. That's a perfect one. We can just use that, for example. This is like a really, really nice descending triangle. I'm seeing so many nice descending triangles, but you can kind of see. Okay, so for example, we could use this guy. This is just like a basic one, and this is a little bit of a rough one, but you can kind of go from like here to here, and just for the sake of showing it. So you see, you're looking for multiple touch points, remember? So you could kind of draw it like this. Multiple touch points. And again, like I said, this is a bit of a rough one, but you get the point. The top is flat, while the bottom is rising or ascending, right? So it's the inverse for a descending triangle. And again, the measure move price target, since this is a bearish pattern, right? So the trend, it's a continuation pattern. The trend is going to continue down after this consolidation period. So triangles are consolidation patterns, but again, the measure move price target, boom, boom. Let's do that. Just be super conservative. You would maybe trade this out of here, and then you would set remember with trading, you can make money when the markets go down or when the markets go up. So you would set essentially your stop loss, or your short position here. So you would pull out here in trading view, you'd set your short position. And again, with any of these setups, essentially what you're going to do is you would set this up in trading view, and then ideally you're having another device next to you, and you can put in these exact numbers. So for example, if you're trading the US dollar and Japanese yen on forex markets and trading with leverage, you can put exactly, okay, my entry position right here. Remember I talked about last time, entry, exit, take profit, okay? So let's see, 109, so your entry is 109. Your take profit's at 108, because remember this is a short position. And then your let me see. And again, this would be like a quick day trade, especially if you're using high leverage. And then your stop loss is here at 109, but I would set this a little bit closer. I would set my stop loss somewhere in this range. I would set it a little bit above that wick there. Okay, so yeah, then you have a 0.2% stop loss, and then a 0.45. So around a little bit over a 2-to-1 ratio, which is not bad. Again, especially if you're day trading. So you get the point with triangles, right? So You understand kind of rising wedges and falling wedges, rising channels. So essentially wedges are usually more like, they look a bit more like this, like they're pushing, where channels are like this, okay? So a rising channel, a falling channel, like a descending channel, or a rising wedge is kind of going up towards this, and then it usually either dumps down or pumps if it's a descending wedge. But then you also have to understand things like a double bottom, things like you can use rectangles to kind of show these, and these essentially are reversal patterns. So let's point out one of these, and this is a pretty decent example. Essentially, a double bottom or a double top looks like an M or a W. Okay, so you'd want to see this. I mean, this is an okay example of one. So you can see how this kind of looks like a W, right? It's not a head and shoulders. We'll talk about head and shoulders or an inverse head and shoulders here in a second, but it is a double bottom, okay? So what does that mean? Well, it's a reversal pattern. So for example, here the trend was going down, right? So into this. So let's just draw this out. And it's actually kind of easier just to use this. You can just go here. Sometimes it's just easier to use a horizontal ray because then it's like perfectly straight. So boom, you see a little top there, but then this double bottom, okay? So you see this. Remember, just like using support and resistance lines, I mean, you could kind of, yeah, this is a little bit more messy one, but you'll get the point. So it's a W, right? So that's what it looks like. It touched here, touched down, touched there, touched here, touched down, essentially here, and then popped up. And again, this is kind of like two double bottoms in one. You can see how this is kind of one as well, right? So in this pattern, this kind of double bottom, again, nothing is ever insanely clean. Like it's never going to look exactly like a W, right? But in this case, this would have been a nice little trade because this is a reversal pattern, right? So the trend was going down into this, and not only do you have kind of this, you could call this, it's kind of a descending triangle, right? So you can start stacking these trends, stacking these things on top of each other. And essentially the whole point here is just to take a little macro view is the more trends you can stack on top of each other, the more data you have to make a trade, the better you are informed. So that's why in the next video, we'll be talking about more things with Bollinger Bands, EMA ribbons, different indicators you can use. So you see when you start pulling all these things together, then you have the best informed decision to trade. So you can literally just trade with support and resistance lines if you're kind of a macro trader, especially if you're trading spot. But the higher leverage you get, the more you want to have these tools on your side. Just like, if you're building a house and all you have is a hammer, well, that's kind of like support and resistance lines, right? If you have a hammer and maybe, let's say, a saw and some nice nails, a drill, some of these things, that's when you're starting to combine these triangle patterns, bull pennants, bull flags, rising wedges, rising channels, descending wedges, descending channels, and now you're starting to see double tops, double bottoms, or M patterns and W patterns. There's multiple ways of saying these. Again, my plan here with Global TA is I will probably end up doing some like attachments for this course, so you can actually download those and see these just for references. But I hope if you have your trading journal, which I talked about in the previous episode, you should just get that. You can literally just probably find one for free or get a piece of paper. I do recommend kind of having a nice one that you actually kind of enjoy using that makes you kind of happy. Like I like that moleskin one that I travel with. And it's fun because you get to look at your kind of history. You can write down your trading things and start doing paper trading, but just study these patterns. And again, you have to understand that the name doesn't matter as much. As long as you can identify the pattern, you can literally make up your own name for it. It really doesn't matter. Don't lose the forest through the trees. That is the main point here. So with this, these double bottoms or double tops. So the double top is the inverse of this. So if we literally flip this upside down and this was on the top, so we'll just find an example of this. Oh, mother trucker. Let's see. Okay. Let's find an example of this. Okay, and again, when you're looking at this, now you can start to see, okay, now I'm starting to understand how these patterns are working, right? So this is like a long rising wedge, right? So you see this, how it's like this long rising wedge if we're just looking at macro and zooming out. The long-term trends. Oh, and let me get rid of this Bollinger Band. I was just using those as an example. I hope you understand what I'm meaning there, though. If you understand, like building the house, building whatever it is, using multiple tools. So as you kind of stack more of these things together, it's adding more tools to the tool belt. But you don't want to overload yourself. You want to have your best tools, whatever fits you the best. So if you don't really understand bull pennants, I'm not a bull pennant trader. Bull pennants essentially are like miniature little triangles, basically. Same with bull flags. Bull flags kind of look like mini little channels. And so an example of this, you could say like, you could kind of show this as a bull flag, kind of as a continuation pattern. Okay, so what this would be is something like this. Let me see. Hopefully, okay, here. No, actually, this is a good one. All right. So what is the trend going into this, right? Okay. So it's moving up in this rising wedge, okay? So or kind of in this rising channel, moving up in this area. Now, we saw this little bit of a push down. This technically is a little bit of a nice that you could call this a bull flag. I mean, you could draw this in multiple ways, but again, if you're like zooming way out, this is technically like a bull flag, okay? So this is a continuation pattern. So you can see this why I'm talking about like it's just very small because you zoom out like this. It all just depends on your perspective, right? So if you're doing this as a macro trader, that's a little bull flag. So that means that the pattern will continue in this way, most likely. Again, it's all about probabilities. So you would draw it like this. Go from here, from here to here, and out of this you could trade that. Okay. Personally, I'm not a big fan of bull flags and bull pennants. You can use them. Again, it's kind of like putting the best tools in your tool belt. Like if you're not a big fan of the I don't know, if you're not a big fan of like a leveling stick and you're like screw it, I'm gonna make things however level I want them to be. You don't necessarily need the level. Like it is literally about what you use the best, what makes you the most efficient in the markets. Test out different things. That's why I recommend paper trading because you can see okay, if you're trying to use these bull pennants or these bear pennants or flags, different things like this, and they're not working for you, then try something else. Try a different tool in the tool belt, and then kind of start acquiring these different tools, crafting them in your trading journal, and then from there you can really build your own strategy. That's the key thing, is building your own strategy, because so many people are just reliant on others to give them trading signals, which I think is the worst thing to do. You should not be reliant. You should not be dependent on other people. This kind of mindset of people being this kind of like victim culture is terrible. You want to take responsibility into your own hands. You want to have the tools yourself. So a little bit of refreshing water there. The main thing, guys, is again focusing on building it yourself. Because if you're reliant on someone else, you cannot. Like I say in the very very beginning of this course, it's like building your own shelter. Once you learn the skills, once you have the tools, you can build your own shelter. It doesn't matter where you are in the world. It doesn't matter what your situation is. Work 1 hour at a job literally anywhere in the world, and then start trading with that capital, and you can literally build yourself to success. I mean, it's the same as I said in the beginning of this course. It's the exact same skills that can take you from $10 to do a nice 10x trade. If let's say the trade just does 2x and you're trading on 5x leverage, boom, you just have 10x your money. So let's say you worked for an hour at some random place, like you went to a job, worked for an hour, got like some landscaping gig and worked for an hour and made like let's say $20. Boom, you just have $200. Now you can apply that same method again, that same $200. Hopefully do a nice another little even like 2x trade. Boom, you have $400. Now you can save the 200, only risk the 200 that you made. Boom, keep moving yourself up there. And with this, you can't always expect, obviously, it to be as perfect as that. That's why you use stop losses, because you can minimize your downside while maximizing that upside. And you have to understand, if you're truly like if you're truly ready to build capital, to build wealth, you can trade 24/7. You can trade in any capital markets. Now, I don't necessarily recommend this because it's not good for your mental state, but you can trade. The capital markets are constantly running, especially in the crypto space. That's the beauty of that. In the stock market, they trade 9 to 5, and that's why I personally don't like trading stocks as much. You can do this. Again, you can apply the same skills. It is a bit saturated, in my opinion. There's so many like Wall Street traders. Same thing in crypto markets, to be honest. But if you know how to ride these waves, if you know how to identify these trends, you can do this. So let's talk a little bit about. We can just show you like an inverse head and shoulders, which kind of so head and shoulders and inverse head and shoulders are essentially this is a pattern where I kind of like to call this like mountains. Like you can call them like double mountains. So for example, like head and shoulders just normal is a reversal pattern, and same as inverse head and shoulders. So you can look at it like this. Let's just go ahead and find one. Ba, ba, ba. Let's see. Okay, this might be one right here. Again, well, I'm kind of zoomed out here, so we can see. Really what you're looking for, like this could be one. What you're looking for are these kind of peaks here, these peaks and valleys. Let's see. And it's good once you are able to identify these because I mean it depends on if you want to trade something like this. Like this is a bit more of a technical pattern. This might be one right here, but certain things have to happen. So for example, for the inverse head and shoulders, you want to see a higher low. So right here we could look in. Let's take a look here. You could potentially say this is a head and shoulders reversal pattern, but not as much. Huh. That's strange. Okay. It is a bit tough to find one. These are ones where it's like as it's playing out, you want to identify these. But just looking at the macro trends of USD JPY, I'm not seeing any really clear signs there. So let's just go to just to show how easy this is. GLD. So let's just look at gold. Let's see here. Economy. Or we can look at stocks. Let's just look at stocks. Come on, buddy. Here we go. So let's just go to, I prefer Barrick Gold, which is, here we go. For some reason, TradingView isn't having this. Okay. Now, let's just go into what it's doing right now. Gold is having a bit of a weird, and you can always see with oracles on TradingView that they're having a challenge if it's like this. So, you know what? Let's just go to BTC. Screw it. Let's just go to here. BTC. And let's go to here. We can use Bybit because that's trading futures, okay? So with this, let's just look for a normal head and shoulders reversal pattern. So essentially what you're looking for is one small mountain, one big mountain, and then a smaller mountain. And then from there, it's going to dump down, okay? So as I kind of look through these, you can see, you know, for yourself, if you find one. But again, this is almost like treasure hunting. You see these crazy rises in Bitcoin. Man, I might just honestly include this in the next one because what we're going to do is basically in the next one talk about more advanced indicators, more advanced kind of patterns. But you get the point. Okay, let me just actually draw it out for you. Okay, let's just draw it out. For example, since I don't want to waste time. Next time I will just have these pulled up and ready. I figured it would just be easier to do this honestly. Okay, so this is essentially what you're looking for. Okay, so here, touching this point again. That's the first little mountain. Now this is the big mountain. Boom. Okay. Now this, you want to see the same area. Okay, so you see how this is the same height as that. Now this gets rejected down, touches this point, maybe pushes up a little bit more, but then it dumps down. And the pattern leading up to this, okay, so let me just do this. Pull this guy out. Use this horizontal ray. And for this horizontal ray, let's go here. This is that kind of bottom we were talking about right there. Boom. We can just drag this up. This is that kind of, you could call this the neckline, okay? So right here is that area, okay? So now let me zoom in on this. All right. Let's go here. Okay. So now that we're zoomed in here, you can see essentially what would happen is the price action leading up to this. Let's say it is, and obviously it's never going to look like this. It's going to look like, you know, like kind of crazy, right? Like it's never going to look exactly like this. This is just for example. Again, I hope you understand what the bigger point that I'm trying to make. So the pattern leading up to this would be something that is rising, right? So that's why I'm calling it a reversal pattern. So a head and shoulders in this case is a reversal pattern. Inverse head and shoulders is just this flipped. So an inverse head and shoulders would look like this, okay? So this is just the normal head and shoulder. Head and that nice little and symbol, head and shoulder, right? Okay. So that's just a normal head and shoulder. Now, what an inverse head and shoulder would be price action going from here. So for example, an inverse head and shoulder would technically be a bullish pattern, okay? So an inverse head and shoulder would look something like this. So price is coming down, price is coming down. We hit a little, the mini mountain towards the bottom, going up, the big mountain down, Then we go back up to this price action, this level right here, and then another mini mountain, back here, maybe test a little bit, and then dump down, or dump up, rather. Sorry. It depends on your perspective. Like if you flip the chart upside down, you get what I'm saying. So in this area, it would be like this, okay? So this is what it would look like. Boom. That's that kind of top there, just like here. It's just literally this flipped. But my mountains there weren't as precise. They're more like mounds, right? They're more like hills. Here it's a little bit more better. So here you can see, if I pull this out, this is kind of that neckline, as I was saying. So this is how you'd want to trade this. Since it's a continuation pattern, it's not a triangle. Remember, or it wouldn't be. Sorry, a triangle is technically like a different type of pattern. But with inverse head and shoulders or head and shoulders, maybe I probably should have saved this for the other video because it is getting a little bit more complex. So I'm trying to keep it just in the basic patterns, and then in the next one, once you guys have kind of practiced this for a week, then in the next one in module, let's see, module 4, I'll talk a little bit more about complex patterns, and then also using some actual indicators, and then in 5 it'll be advanced indicators. So here, essentially how you would see this is you break down from here, you touch this line, it's like, okay, I'm not going to trade it quite yet, right? Because you never know until it completes. So for example, in you when you're actually trying to do the trade, you're only seeing this area of the price action, right? So like for example, let's just say like this is on the 5-minute time frame. So okay, another 5 minutes, you can see this. Another 5 minutes, you can see this. Another 5 minutes, you can see this. Another 5 minutes, you see this, and you're oh, okay, maybe this is a pattern you could trade. So in that case, you would have your breakout right here, okay? So that would be your breakout right around there. Once it confirmed off of this level right here, right? So once it touched here, dumped there. Again, it's all speaking in inverses. So it dumped here a little bit, pumped up, touched this level, confirmed that as support, then it blasted up. So that would be essentially where you'd enter in the position. So I hope you understand that. Again, triangles, we have symmetrical triangles, we have descending triangles, we have ascending triangles, we have bull flags, we have bear flags, we have rising wedges, we have descending wedges, we have rising channels, we have descending channels, we have inverse head and shoulders, double tops, double bottoms. Remember the W patterns, the M patterns, and then just head and shoulders. So those are the main ones, if you will. Again, just start with just triangles. I mean, honestly, you can literally just trade triangles if you're interested in that. I'm, again, not the biggest fan of trading off bull flags and bear flags. It's good kind of as an overall indication of where the market's going. But the beauty is you can pick and choose. You can be kind of opportunistic with this. You don't have to like FOMO into every single trade. Rather, you can go, okay, is this a pattern that I recognize as it's forming? Once you see the confirmation, set a super tight stop loss and test it out, or just paper trade it. So that's basically it for Global TA Module 4. This is a bit of a long one. Sorry, Module 3, my apologies. I was just talking about Module 4. So let me know what you guys thought about this in the comments. Again, any of these, this is just kind of the first time going through this course. I plan to, down the road, do an updated version probably of each of these, just because this is, again, kind of like version 1 of Global TA, if you will, and I would like this to kind of be something where anyone, like I said, like 5 years, 10 years from now, can still watch the course, get this information for free, and again, not have to pay for someone's like ridiculous $1,000 course. I kind of just despise that. I think this information should be free because it allows anyone anywhere around the world to trade in capital markets, and I think everyone should have the ability to do this. That's what I talk about on this channel, Invest Global. So if you enjoyed the video, definitely hit the like button. Check out the playlist down below. I will be kind of like linking this playlist below most of the videos just because I want people to really understand this technical analysis. I might be doing like a course on maybe fundamental analysis as well. But focusing on this first. Again, each new episode comes out on Sunday. As always, like, subscribe button all. So subscribe to the channel, hit the like button, hit the notification bell so you stay up to date with the time-sensitive content. Invest Global, and until next time.